This year is Connect 10-year anniversary, and we saw already that the success of the Connect program actually start from stocks, roll into bond, roll into ETF, and last year we have a Swap Connect launch as well. On the derivative front, we are very proactively working on the China Treasury Bond Futures contract, as well as our A50 options. And when we get it more ready, we really like to push out to the international community.
What are HKEX's priorities for 2024?
The core of our strategy is about how to connect China with the rest of the world, and that remains very, very much intact. If you look at China today, it still accounts for more than 30% of the GDP growth of the world, and it remains a very important, vibrant, growing sector. And there are plenty of opportunities that we are still seeing in the latest development of China. HKEX, we are very fortunate to be having that unique positions to help connecting a lot of global investors' interests on China.
What trends are you seeing in your market?
Number one, our Connect program, which is a bi-directional program for global investors investing into mainland markets, and also mainland investor investing into our market, has been very vibrant. At the same time, we are seeing that the China economy has been going through the level of transformations. But at the same time, we still see a very good two-way flows of capital. In fact, if we look at the first 2 months of trading, we are seeing like the northbound, i.e. global investors who are trading into the onshore Asia markets, has increased by more than 20% to 130 billion, which is a very significant number in terms of trading. And at the same time, we're seeing a very healthy net inflow of 46 billion into the Chinese equities market. There are a lot of reallocations of risk appetite into China at the moment, given the low valuations that we see. And that's one trend that we're seeing that is meaningful. On the other hand, we're seeing also significant pickup in diversification of our businesses at HKEX, which actually helps grow the entire product.
The Hong Kong derivatives market is trading well, but your cash market is down. Why is that?
Healthy growth in derivatives cloud business, we are very encouraged. Super thankful to a set of strategy that we set out in the last couple of years to strengthen our order offering and strengthening our market making mechanism, taking about traction from the global investor community and growing participation from mainland investors as well. So a lot of very successful products that we launched during time, including the very successful Hang Seng TECH futures. Now every day the ADV on that product is over 100,000 contracts. And also we are seeing options of futures launches, MSCI A50 launches. All these are great new products that launched in the new product learned in the last couple of years that we launched in the last 3 years. Actually accounted for more than 15% of our daily trading volume today. So I think the new product introduction has helped propel the growth in our derivative markets, and that open interest also have been increasing consistently for the last couple of years. Now coming back to the cash market, I think we are seeing the same thing that global equities market, seeing where when rates are higher, valuation actually are lower. As a result and reflections of that, generally a more stringent risk appetite in terms of stock selections, and especially in more emerging markets like in Asia, the competition is actually quite fierce for capital, and you have to remain up on the game to make sure that you capture all of the international investors' attention. But a very unique thing, and I think unique advantage for Hong Kong remain super intact is it's the only place where both you can have full accessibility to the mainland liquidity who are coming through Stock Connect, but at the same time that we get a lot of the global investors flow.
Given the macro landscape, how do you see the appetite for international investors to invest in China-related assets?
A lot of the economy, what we saw as go through the different cycles itself. And I do think that the China cycle, as China market has gone through its cycles, and there are a lot of great deal of opportunities. And importantly, China is accounting for more than 30% of global GDP growth, and is important growth engine for for Asia. And there are a lot of actually increase in intra-regional trades that actually help to bring transactions opportunity. Last year at HKEX, we launched a specialist technology chapter called HKEX, which allow a lot of these fast-growing, interesting, hot-tech sectors to come to HKEX list. We will then attract other issuers, international issuers, who consider and be interested in the mainland flows to come the primary listing in Hong Kong and be eligible into Stock Connect. So a lot of these great initiatives, we are making refinements on our listing process and also our platform to attract the more diversified pool of interesting issuer opportunities.
What is your expansion plan this year?
So first, obviously, we need to hire enough people into those offices and start to pick up some more of those administrative work. There's still currently a lot of these regional offices. As we're building up that, tapping into more of the investor community or the issuer community, we will then be more ready to take on another office. There are many interesting places that we have been consistently looking at, the Middle East and other part of Asia, and maybe another office in Europe and potential in the US. These are all good possessions. But first thing first is we want our London office and our New York office to be sound and totally operated very efficiently and very effective in actually communicating what we're seeing on our part of the world to this part of the world.
Why is the whole of Asia doing so well in growing volume?
Institutionalization, but also education, from the idea of the adoptions of derivative as a risk-taking and risk-hedging tools overall in the region. Because of the vibrancy of the economy itself, more new products are being created about our part of the world, where it's attracting new flows that are coming in. If you look at our exchange, this is actually new product launches in asset classes that previously were not fully accessible. So I think those trends are phenomenal, especially when Asia is actually coming together and thinking about how Asia action and transact more in Asia. I think there are more of these opportunities that we can explore together.